Here's a look at the dollar index. Going to start off the analysis here on the weekly time frame. As you can see, we have resisted thoroughly the 95 level, which was near that 200 on the weekly, and we are starting to drive down. Now, we are looking at nearly a 50% retracement here at the previous week's candle. So we need to see, well, we'll probably end up seeing, which I'm going to get to in a little bit, is just a little bit of a bounce here, and then I expect a continuation to the downside here. Still expecting a further push, ultimately heading back down to the 92.44 level, and it could come as soon as this week. We'll see how quickly they let this happen, but in essence, what they're doing is they're bringing down the dollar, and that is helping to put a little bit of a floor underneath stocks. So it's starting to take shape a little bit here, and just kind of looking back in time, we had a similar type of a move where we had a pretty big upshot. This time we closed red, so again, could see a little bit of a push to the upside, and I'll get down to it in a second. And then we're looking at another push to the downside, I believe. Still looking at those 92.50s towards that downside. Daily time frame, we're running back right back down into the 23.6 fib, which is going to be the 93.76 level. That's going to be off the break of this trend line, which I'll also drop down in a second too. And again, we're going to be looking for that push down to 93.96, and then once we break below this location here, you will recall from your recent memory, not so distant at least, that we had a resistance line basically flowing like this, and then we had another one basically that could have come across as well. But so once we do break underneath this trend line around 93.30, then we'll be on our merry way back down to at least 92.80s, looking at a test, and then another continual move to the downside. Like I said, looking for 92.50s. Ultimately could see a full retracement back down to those 91.60s that I mentioned weeks ago. So again, waiting for this to just continue to break down. The breakdowns do take a little bit of time. Once we break through the 23.6, start closing underneath of that again, that should accelerate the selling pressure to the downside 92.60s near term. Well, first, again, we're going to be looking for hourly time frame, of course, so we can see what we're talking about. Again, break of this trend line, and we are continuing to go down. Otherwise, we support, try to push up again up to maybe 94.40, and then another reversal to the downside here. 786 is going to be just about the 93.60 level, so we can expect another bounce at this time, and then back up to 94ish, and then continue on our merry way to the downside again. So that's basically what we're looking at here on a smaller scale, and this trend line right here is the one I just drew in. You can remember that we did have that break, above these two levels here, and then we had that trend line resistance going across where we had that big breakout, right? Everybody remembers that one. So then we've been kind of moving around, and now we're looking at ultimately coming back down and testing that zone, and that's that 93.30 level. So near term, what am I expecting? I'm expecting to see a move to the upside here, test those 94.30s, maybe get a little bit of a push up higher than that. If we break to about 94.45, then we'll be in the trend line again, probably meandering for a while, and then looking for the next push to the downside level, 93.90s, and then looking for another bounce, and then probably seeing another continuation to the downside. 93.30 should come this week.